We also have Sandip Sabharwal joining us on the show. And Sandeep, I wanted to begin by discussing the real estate sector. Every day we are hearing about new launches. They're coming in at very high prices, but more interestingly, they're getting lapped up very quickly. Do you think there is likely to be a bubble here soon, or just because it was so underperforming and underrated that it was due for a re-rating?
Yeah, so because real estate went through 10 years of downturn, so a few years of upturn was always on the cards, and that's what is getting reflected now. That said, the second part of your comment also is right that we are now entering into valuation territories which are much higher than what possibly can sustain because finally real estate demand at the upper end can only sustain for some time, and there's only limited demand for that. Now, launches were limited for a long time, and that led to the price uptick. Now, launch pipeline also is picking up. So we need to monitor it, but I would say that overall, as a space, the space will do well, but the valuations of many of these stocks already capture that.
All right. Meantime, Sandeep, wanted to also get in your thoughts then as to how you're reading into Cipla with respect to the kind of reaction we saw. Do you think that it was justified in yesterday's trade? And how are you looking at the long-term prospects? Is this a good buying opportunity?
So the exact impact of the restrictions I have not been able to evaluate, but I think pharma stocks tend to be volatile around such FTA actions, and uh, that is something which always is a concern for the pharma company that suddenly there are some restrictions which disrupts the entire projection, etc. So I would think that Cipla should still do well long term. Recent result trends have been good, but the impact of this move that I have not specifically evaluated.
The other thing is, Sandeep, that we are seeing that today there were two brokerage notes and two strategy notes. Jeffries, wherein they have actually moved away from NBFCs into HDFC Bank and ICICI Pru Life. And then you also had a note coming in from, the Greed and Fear Chris Wood, wherein he has reduced his weightage on Bajaj Finance. Do you think the best of the NBFC rally is behind? And probably it's a good time to look at insurance and other plays as well?
Insurance companies, I don't think there's any big play because the companies have disappointed continuously for years now. So there's nothing changed. And you cannot keep on changing your investment strategy so much as these brokerages keep on doing, where they keep on reacting to news and selling and buying stocks. So you have to preempt these moves. So obviously the risk in Bajaj Finance was evident to anyone who could see it because they were growing so rapidly. And in segments where RBI was clearly flagging concerns. So I think we need to monitor the asset quality over the next couple of quarters to see whether the risk actually plays out or not. If the risk doesn't play out, then at some stage Bajaj Finance will become a buying opportunity. Near term NBFC margins will come under pressure for sure. So most companies have indicated 10 to 15 basis point impact on margins. So that is something we'll see this quarter, next quarter, more so next quarter, I guess. But if we believe that rates are peaking out and we could see a more benign environment going forward over the next 2, 3 years, then in such environments, normally NBFCs actually outperform. So I think we are in a flux sort of situation where we cannot categorically say that we should sell off all NBFCs and buy banks or anything. So I think it's something which we need to monitor closely and then take a view stock by stock.
Thoughts on that point? You briefly touched upon, Sandeep. Today, Chetan Aya also comes out with a note from Morgan saying that India could actually be the first one in Asia starting to see rate cuts next year. What are your thoughts on rate cut cycle?
So rate cut, Ajay, it looks tough to me given the kind of commentary which comes out from RBI because they seem to be stuck on this 4% inflation thing. And if for an economy like India to sustain 4% inflation becomes very tough given our structural inefficiencies and the food inflation which is nearly 55% of the CPI basket, and where for that to remain below 4% is very tough. So I'm not sure where this entire rate cut argument is coming from, unless and until globally we start seeing a very sharp rate cut cycle, which also seems unlikely today. I think we should be happy that rates are where they are. I don't think the interest rates in India are restrictive for growth at this stage. The rate hike cycle has been very benign. When US 10-year bond yields were 1.5%, Indian 10-year bond yields were around 6.4%. When they went to 5%, we were still at 7.4%. So just a 1% uptick. I think things are pretty good in India, and I think we should be happy that if they remain the same way.
Sandeep, you must have seen the way yesterday all the chemical stocks have started moving in unison. In fact, some of the funds have started moving there as well. Destocking, etc. A lot of issues have been weighing on the chemical space for a long time. Are there any signs in your view that chemical space is kind of bottoming out or not yet?
Yeah, I don't think so. So what usually happens is that when the stocks get beaten down so much, like many of these stocks have fallen 50-60% from the top, they'll obviously be bounced back. But calling that a change in trend, I think, is a very dangerous thing, because commodity demand is subdued. Huge capacities have been planned by companies and which are coming on stream at a time when prices are down. So normally we see this kind of commodity cycle go on across industry, and many of these companies actually will see much more depressed profit cycle for a long period of time, which most of the analysts are unable to fathom. They just look at what profits they deliver in 21, 22, and they think that it will come back. It's not going to come back anytime soon.
Point taken, but I wanted to also go across to Naresh and get a sense on the entire FMCG basket, because slowly and steadily some of those stocks have managed to inch up, whether it's a Varun Beverages, which is up 60% this year, Colgate, which is up by 40%, Radico Khaitan is up 40%. In fact, Radico has launched some new pink vodka as well, if anyone is interested. So that's one more trigger
back to
point.
Friday talk, huh?
It is Friday after all, right? And IDC too is up around 32%. And of course, we got those channel checks as well that the volume growth is actually picking
So
up.
ITC and okay, fine. Now I see where you're going.
But let me take that the races you, or you have something
No,
to
I
add
have
there?
something to say. Look at Radico.
Yeah.
It's outperformed the entire space, right from Som Distilleries to United Spirits to breweries, that stock is the best performing, almost 1500, knocking at 1500.
Yeah.
I would say the largest reason for this is innovation. Every month they have, some new product or the other, and bulk of them are doing well on the street. I mean,
And
if
you've
you
tried them and you have some
of them,
feedback?
yes, some of them, yes, but this stock has really outperformed. Sandeep, how come Radico has got the the cocktail right for outperformance and numbers, and others are lagging there?
It's very tough to say. It's a company which I used to track many years back, but then left tracking because it never used to perform. And then after that, it suddenly started performing. So I have no idea what's going on.
No problem. So the other stock to discuss is Sammy Hotels. Sandeep, the IPO of Sammy Hotels itself came at a stage when, say, the industry leaders have quadrupled from 75 to, look at how this Indian Hotels has done. So there is one section of the market who believe that we are, if not late stage, but at least the middle stage in hospitality in this phase of the cycle. So this IPO Sammy Hotels came in slightly on the later side. So your thoughts on that? Where exactly are we on the hospitality cycle? And the other one, the main plank for IPO plank for this one was around 1800 crore debt, around 3000 crore MCAP on listing, and as debt reduction happens, the valuation could actually unlock. Have you looked at Sammy?
No, Sammy, I haven't looked at, but
Okay.
overall on the hotels, hospitality space, I would still think that the cycle is on, and the especially both for big business hotels as well as premium as well as leisure hotels, the trend is positive. The room rates, occupancy, everything is moving up. More events are happening, which will add to profitability of these companies. And many of these companies realized during COVID terms that they have to keep some cost controls on so that profitability sustains. So many of these companies are focused on reduction of costs, reduction of debt, etc. I would think that the hotels industry is in a good sweet spot still. It should last for at least 2 3 years more, unless and until we go into a economic slowdown, which leads to a slowdown in expenditure, etc., which I don't see happening in the near term. So Indian hotels and Lemon Tree are two which we own, and I would think that I would still be positive on them.
Okay, point taken. There's also a note coming in on Zomato from Morgan Stanley where they have a target price of 140, upside potential of around 20%. What's your take on this one, Zomato, and if you have a view on Honasa as well, Sandeep?
Zomato, near term, it's had a sharp uptick, so we need the price to stabilize. Trends from whatever the company's been reporting are positive, as should have been in a duopoly. That ultimately profitability improvement should have come, and that started to come now. So I think Zomato should be on the radar of investors whenever opportunities come. Right now, at these prices, it looks a bit stretched. And Hanasa, I don't think they have any long-term strategic advantage which will sustain profitability. I think 1 or 2 quarter here and there post IPO results shouldn't excite people. Let's see the trend over the next few quarters, how growth sustains, how margins sustain, then we'll take a view.